Hey everyone, welcome back to another charting session where we break down what's moving the markets and what you need to be watching this week. If you're new here, my goal is to make market analysis approachable and actionable. Whether you're a day trader, swing trader, or someone who's just trying to learn how to navigate the markets, this space is for you. Each week I go beyond just pointing out tickers. I help you understand the story behind the price action so you can trade with real confidence, not just vibes. Before we dive in, if you've been finding these sessions helpful, do me a huge favor, hit that like button so this content can reach more people who are trying to grow as traders. Subscribe to the channel so you don't miss future sessions. We drop weekly watch lists, educational breakdowns, and live trading content regularly. And most importantly, drop your top watch list names in the comments. I want to know what you're watching this week, and I'll make sure to chart out some of your tickers in the next video. This is a community. Your input helps shape what we cover each week. All right, let's lock in and get into the content for this week. Before we dive into this week's tickers, let's lock in on the inside of the week. This is a lighter economic calendar week following the 4th of July holiday, but that doesn't mean we can relax. Lower volume weeks like this can sometimes produce sharp moves on less liquidity. The key data points this week are the NFIB Small Business Optimism Index on Tuesday and jobless claims on Thursday. These will give us insight into the health of small businesses in the labor market. Both are major drivers for small caps and consumer sentiment. Also, don't lose sight of the geopolitical tensions continuing to unfold in the Middle East. Headlines out of Israel, Iran, and the US could still create risk-off moments this week. Now, let's dive into the setups. Let's start with SPY. We could be heading into a lower volume week following the holiday, but that doesn't mean we can relax. In fact, low volume weeks often create sneaky, fast moves. Additionally, volume could show up with the introduction of the big, beautiful bill on Friday. SPY is still trending higher and sitting right at the 625 psychological level. On Thursday, price pushed a new all-time high at 626.28 and cooled off into closing. However, in this environment, price can drift further than expected. Our main support sits at 620, which was previous high of day. Additionally, we look at 622 as the breakout level from non-farm payroll report. If we lose that level, I'd expect some selling to step in, especially if jobless claims on Thursday come in hot and push yields higher. The key thing to watch this week is how SPY behaves in thin liquidity. False breakouts and false breakdowns are common when volume dries up. Tuesday's NFIB Small Business Index could give us more insight, but Thursday's jobless claims will likely dictate rate expectations for the rest of the week. Also, don't forget about the geopolitical risks still in play. In low volume conditions, even minor headlines out of the Middle East or related to tariffs can spark sharp intraday moves. You guys saw what happened with the Canada announcement a few days back. So for SPY this week, I'm watching for clean holds of support, confirmation volume on any breakout above 625, and whether we start to see money rotating into small caps or more defensive names. Bottom line, it's a week to stay nimble, stay patient, and remember that sometimes the cleanest setups fail in quiet markets. Let's talk about QQQ. This has been the driver of the market all year, led by mega cap tech, semiconductors, and AI names. But heading into a potential low volume summer week, we've got to ask, is this where QQQ starts to stretch too far, or does tech leadership just keep rolling? The levels I'm watching are 555 for support and 558 for resistance. QQQ hit a new all-time high of 557.20, but closed at 556.22. In low volume, we have to stay alert for potential traps. This week, jobless claims on Thursday is the main scheduled report that could move Treasury yields, and QQQ is extremely sensitive to rate shifts. If yields spike, QQQ could pull back quickly, but if yields stay stable or drop, we could see another push higher through resistance. Also keep an eye on sector rotation. Money could start moving out of tech and into small caps or defensives, especially in a low volume environment. And don't forget the potential for headline-driven risk. Geopolitical surprises can cause fast profit taking in names that have been leading. So for QQ this week, I'm focused on whether we hold 555 support, whether any breakout above 557 comes with real volume, and whether we start to see leadership shifting away from tech. It's a week to watch the bond market and be ready for both sides. Next up is IWM, the Russell 2000 Small Cap ETF. This is one of the more interesting setups this week because IWM is finally starting to show signs of life after lagging all year. We've been seeing steady leadership from SPY and QQ, but small caps are starting to base out and are showing early signs of sector rotation. Small caps tend to benefit from lower rates and improving small business sentiment. So if economic reports come in soft or optimistic, IWM could break out. IWM still sits about $20 away from testing a new all-time high. After non-farm payroll on Thursday, price tested 224.40, but completely rejected. Price did not cross 223.50 all day. Support is sitting right at 222, and resistance is up at 223.50. If we clear 224 with volume, this could continue a rotation into small caps. Also keep in mind that IWM is highly sensitive to Treasury yields. If yields start dropping this week, small caps could quickly pick up steam. On the flip side, if yields spike or big tech continues to dominate, we might see IWM stay range-bound for a little longer. If it ends up being a lower volume summer week, I'm focused on whether IWM can hold support, break out with conviction, and attract sector rotation. Bottom line, small caps are setting up and could be ready to move. I just need to see volume confirmation and supportive macro conditions before leaning into the breakout. Out of the big three we track, IWM is the ETF with the most built-up consolidation, which could equal to great breakout potential. That is why we started to trade RTY on Thursday. This is the futures ticker for IWM or the Russell 2000. We will continue to track this very closely throughout the summer. Next up is Apple. Apple has been sitting right near all-time highs and continues to be one of the most important names on the board because of its massive weight in both SPY and QQ. But we need to be cautious of potential sector rotation or short-term exhaustion in mega cap tech. Support is sitting at 210, and our main resistance is up at 225 with a supply zone between 220 and 225. If Apple breaks through 225 with volume, we could see another push higher, but if we lose 210, that would likely pull the broader market down with it. And Apple could potentially retest a lower support at around 196, which is the base of previous consolidation before last week's $13 move. The key macro driver for Apple this week is Treasury yields. If jobless claims come in hot on Thursday and yields spike, Apple could see immediate selling pressure if yields stay flat or drop. Apple could hold up well and continue to lead. Also keep in mind that in low volume weeks, we often see money rotate into small caps or defensive names. If that happens, Apple could fade as traders take profits and reposition. What I'm watching closely is whether Apple holds its leadership role this week or if it starts to give early signs of tech fatigue. Let's talk options contracts. A lot of us have been asking what kinds of things to look for in order to maximize an options position. First and foremost, you need time. Take a look at our CMG swings. We opened up positions with a month or more worth of time. This allows us to see our setup develop. As for Apple, I invite you to check out the open interest and volume for the following contracts: August 15th, 240, 250, and 260 calls, alongside September 19th, 250, 260, and 270 calls. Of course, this is with the thesis that the market will continue to run, that Apple has enough steam to drive itself back up to all-time highs. However, keep in mind that we don't need these contracts to go in the money. We're simply looking to catch the influx of volume interest into these positions. If market keeps running, these are all contracts which I believe to be fairly priced and give us enough time to manage our position if the setup does retrace a bit. Bottom line, Apple is a critical market signal right now. If Apple holds strength, QQ and SPY probably continue. If Apple starts to fade, we could see the beginning of a sector rotation. This is a week to watch carefully for those shifts. Let's break down Intel. Intel has been quietly working its way higher after trailing semiconductors for most of the year. Right now, Intel is setting up as a potential laggard rotation trade. While NVIDIA and AMD have been leading, traders may start to look for second wave opportunities in names like Intel. Support is sitting at 20%. If we lose that, I'd expect a pullback. Current trend or consolidation low hit 17.67 current resistance, sits at 25, a clean break through 25 with volume could open up a nice continuation setup into our weekly supply zone between 27 and 29. The key catalyst this week is sector strength. If semiconductors hold up, Intel could continue to grind higher. If the chip sector pulls back, Intel will likely follow. Thursday's jobless claims is also a big macro watch. If Treasury yields spike on strong labor data, Intel and the broader chip group could come under immediate pressure. Also be on the lookout for any AI headlines or chip supply chain updates. Those can move this stock quickly in either direction. In low volume summer trading, I'm focused on whether Intel can deliver a confirmed breakout or if this setup gets faded like many false moves we see in quiet weeks. Looking at options contracts, NTC is showing good potential with fairly priced entries. Personally, I am considering the following contracts: August 15th, 24, 25, 27, and 30 calls. If we want more of a safety net, September 19th contracts bring some potential, specifically the 25, 27, 30, and 35 calls. Lastly, I am highly considering January 16th calls based on the average movement of INTC. Looking at contracts like 28 and 30 calls, take a look at volume, open interest, and where the chart currently sits. Bottom line, I like the structure here, but I want to see volume and broader chip strength before leaning into the breakout. Let's take a look at Sunrun. Run has been building a base near long-term support between $6 to $8. Last week we saw a break and hold of 8. In fact, price had its biggest weekly upside move in the past 6 weeks. Price closed at around 10.550, which brings us into our golden zone of IPO pricing. The biggest driver for run right now is treasury yields. If yields pull back, run and other clean energy names can. Move quickly. If yields spike on Thursday's jobless claims, run will likely get rejected at resistance and push lower. Support is sitting at $8. If we lose that level, this setup weakens fast resistance is at 12. If run can break through 12 with volume, this could turn into a fast-moving breakout, especially with the elevated short interest. I'm also watching to see if money starts rotating into clean energy this week. If traders pull capital out of extended sectors like tech and rotate into solar, run could catch that wave. This is a summer volume week, so I'm being extra cautious about volume confirmation. Low volume breakouts are more likely to fail in this environment. Also keep an eye on the news flow. Policy headlines tied to solar or clean energy could be the spark that pushes this name higher. Like Apple and Intel, we will look for month plus options contracts as viable opportunities for swing positions. Run has interesting open interest and volume within August 15th, specifically 11, 12, and 15 calls. Looking a bit further out, the $14 call for September 19th is a bit interesting. I might also be interested in a $15 call for January 16th. Bottom line, I like the structure here, but I need to see rates drop and volume confirm before leaning into the long setup. If we get that, run could move quickly off this base. That wraps up this week's watch list and key market breakdowns. We covered SPY, QQQ, IWM, Apple, Intel, and Sunrun, each with setups that could move in this lighter volume summer week. Remember, just because it's a low volume week doesn't mean the moves won't be sharp. Thin liquidity often leads to exaggerated price action, false breakouts, and faster reversals. Make sure you're managing your risk, protecting your capital, and waiting for clean setups with volume confirmation. Patience will always pay in these kinds of market conditions. If you found this session helpful, take a second to support the channel, drop a like, leave a comment, and make sure you're subscribed so you don't miss the next watch list or live session. Likes, comments, and subs really help push this content out to more traders, and they let me know this is adding value to your week. Also, drop your tickers in the comments. I always check what you're watching, and I'll chart out some of your names in the next session. Appreciate you all for tapping in. Stay sharp, stay patient, and I'll catch you in the next one.